All right, I'm ready.
You can start.
All right, do you want me to go ahead and start the presentation?
Yeah, go ahead, start.
All right. Just. Okay. All right, so can you see me all right? All right, so we can go ahead. We have the first slide. Okay. I think that's the last slide. All right, so Assalamu alaikum, everybody. My name is Amina Saeed, and I'm an attorney with the River Valley Law Firm. We are located in West Suburban Chicago, and our firm is focused on estate planning, asset protection, special needs planning, tax and charitable planning, as well as guardianship and probate matters. All right. I'm happy to be here with you today and for this in-depth look at the law on ABLE accounts. This can be a confusing area in many respects, so my goal today is to break it down for you in a way that is easy to understand. Okay. All right. Now, a quick note on housekeeping. I have a lot of material to cover, so I'm not going to be taking questions during the presentation. I urge you to write down your questions either in the chat or on paper, and I will address all the questions before we end. If you prefer, at the end, you can also raise your hand and ask your question by voice as well. And please know that this presentation will be available for anyone who wants it afterwards. Okay. Now, ABLE account legislation was signed by President Obama in 2014 and was expanded and clarified a few times since then. These are commonly known as 529 ABLE or 529A accounts. This is because they are very similar to the 529 plans that are for education purposes. 529A account is a savings program for certain disabled individuals, and the benefit is that it allows them to save and not have it be considered as an available resource for Medicaid or Social Security income, up to certain limits. The 529 plans are for education, but this is different. 529 ABLE accounts allow states to set up this ABLE plan, and most states have done so. A few have not. So next slide, please. You need to check your state to find out if your state offers the ABLE account. There are two good resources listed on this slide to determine what your state offers. If your state happens to be one of the few that does not offer an ABLE account, you can still establish an ABLE account. You can do it in another state that doesn't have a residency requirement. Okay, next slide, please. Normally, you can only have one ABLE account. This is different from the 529 education savings accounts because when it comes to the education account, you can have as many accounts as you want for each different child. So one child can have 3 accounts, 5 accounts. But with the ABLE account, each person can only have one account. The exception is if you have a 529 education savings plan and then you roll it over to an ABLE account. There is no benefit, though, to having separate accounts because the limits apply in the same way no matter how many accounts. So there is no benefit to having more than one ABLE account, and you can't do it with that minor exception anyway. So best thing is to have one ABLE account per disabled person. Now, when you're choosing between ABLE accounts, you will want to look at a lot of different factors, just like when you're shopping. So first thing is you want to look at the state benefits, and you want to look at the availability of a debit card to see if that's something that you might want to consider having. It allows the beneficiary, the disabled child, to use that debit card. You also want to see what the fees and expenses are of each ABLE plan. You want to know what the investment options are. Some have more limited investment options than others. You also want to know what are the lifetime contribution limits. You can check all these things out for all the various ABLE account plans that are available. Next slide. So the ABLE account is available for anyone who is disabled before the age of 26. And in terms of their disability, the disability can be physical or mental. As long as the disability was there prior to the age of 26, that person can qualify to establish an ABLE account. Okay, next slide. The beneficiary is the owner of the ABLE account, meaning the beneficiary has control over the assets. This is different from a 529 education account because in a 529 educational plan, the donor, who's typically a parent or the grandparent, is the owner of the account. On the plus side, having the beneficiary serve as the owner gives the beneficiary some control over their life. It gives them a sense of wealth. Gives them a sense of worth. It makes it easily accessible for them. They can get to the money. And in that sense, it can be a wonderful tool because it helps the beneficiary, the disabled person, feel that they have some control. Now, this also means, however, that parents cannot change the beneficiary to a new person. That's the one downside to that. Next slide. Okay, the ABLE account allows the beneficiary to save and manage their own funds in their own account and exercise a sense of control and gives them self-worth. It's an easily accessible pot of money for the beneficiary, and you can, make sure that there's a limited amount in there. But then why can't the beneficiary just go down the road to Chase or Bank of America or Wells Fargo and open a regular bank account and save that way? What's the difference? Well, the difference is that there are resource limits imposed by Social Security. And if the disabled person doesn't use an ABLE account, they are going to bump up against those resource limits. The ABLE account allows them to contribute without affecting that. Now, next slide. The contributions are limited to $15,000 per year. This is tied to the gift tax annual exclusion amount. So that's the amount a person can give away to somebody else without paying any gift taxes on it. So you can give up to $15,000 on an annual basis to each ABLE account. But that means that it's $15,000 to each person. If you have two parents, they can collectively contribute $15,000. It doesn't mean that each parent can give $15,000 to make it $30,000. There is one exception to this rule. if the beneficiary, the disabled person, is working and not contributing to a defined contribution plan, for example, if they don't have a 401k, then they can contribute the lesser of their salary or the poverty level for a one-person household for the preceding calendar year. That's a mouthful. So let me just break that down a little bit, what that means. So if the disabled person has a job and they work, let's say they earn $20,000 this year, they can contribute only up to $12,760. But if they earn $8,000 this year, then they can only contribute $8,000 because that's tied to the poverty level income requirement. And for most states, it's the $12,000 figure. Now, this is in addition to the $15,000. So the $15,000 can be contributed, say, for example, by a parent. And if the child works, then they can add this additional amount. Next slide. If the beneficiary contributes their earnings to the ABLE account, they can qualify for the Savers Credit. The Savers Credit is a special tax break to low and moderate income taxpayers who are saving for retirement. They must be 18 or older, they can't be claimed as a dependent by another taxpayer, and they can't be a student. So this is a nice benefit that the ABLE account offers. Next slide. Now, this is all new. 529 plans can be rolled over to an ABLE account. The requirement is that the beneficiary has to have been disabled before the age of 26. So let's say that Mariam and Bilal are siblings. Bilal is disabled, Mariam is not. Her parents set up a 529 educational account for her. But she did really well in school and she gets a full scholarship to Harvard. So she doesn't need the money that her parents saved up in her 529 education plan. Bilal is disabled. Mariam's parents can take the money that's in Mariam's 529 education savings plan and roll it right into an ABLE account for Bilal. Next slide. Now, probably not the biggest benefit, but one of the benefits of an ABLE account is that the income from the account is tax-free as long as it is used for qualified disability expenses. This is really broad. It includes education, housing, transportation, and a lot of other things. It's really broad. So if you use it for any other things, though, then the income will be taxable, and there will also be a 10% penalty applied. So you want to make sure that you use the money that's in the ABLE account only for qualified expenses. Now, let's see. So remember that you can, if you take it out and you use it for a qualified expense, then the income will not be taxed and there's no penalty. But if you use it for some other expense, so let's say you want to go and go take a long trip around the world with a disabled person, so that disabled person wants to use the money in the ABLE account to take a trip around the world. That's probably not going to be a qualified expense. And in that case, then there is going to be income. The income will be taxed. It won't be tax-free. And there will also be a 10% penalty applied. So that's an explanation of how the income tax works on the ABLE accounts. All right, so next slide. Now, if the beneficiary dies, the ABLE account can be transferred to another beneficiary, meaning another disabled person, as long as the other disabled person is also a member of the family. So this doesn't really happen all that often where you get to transfer it. Next slide. So the benefits of the ABLE account are that it's tax-free for qualified disability expenses, it's gift tax-free, and if the balance is up to $100,000, it still allows a beneficiary to qualify for SSI and Medicaid. If the balance is above $100,000, then the beneficiary will no longer qualify for SSI, but they will still qualify for Medicaid. So you can have a couple $100,000 in the ABLE account, and the beneficiary still receives their Medicaid, which is really still a great benefit, and it provides them some stability. Next slide. Now, having said all that, the ABLE account is not a substitute for a special needs trust. The two are really complementary. They go hand in hand. The special needs trust has its place. You don't have the limitations on who can establish it, on the age the person becomes disabled. There is no limitation on the amount that is contributed. So this chart looks at it in more detail. We can move to the next slide and the chart. All right, so if you look at this chart, we get to see several different aspects of how the ABLE account measures up to the special needs trust, okay? Regarding the onset of disability, an ABLE account requires that the disability have started before the age of 26. There is no such requirement that the disability must have started before a particular age for a special needs trust. The disability can occur at any age. Now, in terms of the age of the beneficiary, there is no requirement for an ABLE account for when the account is started, as long as the disability started before the age of 26. Meaning a person can be 60 years old, and if they are disabled, then as long as the disability was there before the age of 26, the ABLE account can be established. In terms of the special needs trust, and there are two different kinds of special needs trust, okay? So there's a first-person special needs trust and a third-person special needs trust. It's important to understand the distinction between the two. The first-person special needs trust, or the first-party special needs trust, is a special needs trust that is established by the beneficiary, by the disabled person, with their own money. A third-person special needs trust is established by somebody else on behalf of the disabled person, or for the benefit of the disabled person, I should say. So there's a slight distinction there in terms of the age. The special needs trust for the first person, so when the disabled person establishes that trust by themselves, they must do it before they turn 65. A third-party special needs trust, there is no age requirement whatsoever as to when the disability started or when the special needs trust can be established. Now, in terms of who can establish the account, the ABLE account can be established by the disabled adult, their parent, guardian, or their agent. Obviously, parent or guardian if it's a minor. There is more flexibility for who can set up a special needs trust in most respects, though. What about the number of accounts? For an ABLE account, there can only be one account, as I explained before, unless it's a rollover from a 529 account. With a special needs trust, you can have multiple trusts. Now, in terms of fees, the fee for the ABLE account is up to the financial institution. For the special needs trust, there will be attorney fees, possibly trustee fees, and possibly court fees. So you have to make sure you compare all of these things. Okay, next slide, please. Let's compare the contribution limits. For an ABLE account, it's $15,000 a year, plus the beneficiary's earnings up to the poverty level, as we talked about. For the special needs trust, it depends on the type of trust it is. So let's say if Bill Gates sets up the special needs trust for your child, he can put $1 billion in that trust, and that would be perfectly fine. Now, if the disabled person themselves set up the account, then they are limited to a reasonable amount of money for their needs. Now, there are also important distinctions between ABLE accounts and special needs trusts with respect to the investment options. The investment options are set by the financial institution, and you can typically make changes twice a year in most ABLE accounts. In contrast, there are no restrictions on investments for a special needs trust. This is really important for anyone who wants their investments to be Sharia compliant. So you need to understand that for a Muslim person who is concerned about Sharia compliant investing, the ABLE account may not be the way to go, because the ABLE accounts, each state, of course, has their own plan. So you have to look at your state's plan. You may also want to look at other states' plans. But in general, most states, they have very specific ways how the money is invested. And in most cases, it is not invested in a Sharia compliant way. So if that is something that's important to you, then the ABLE account is probably not going to be a good option for you if you're looking at it being an investment tool for the beneficiary. In that case, the special needs trust is going to be a better fit, because you have the ability to invest that without any restriction. Okay. There are also distinctions in the types of distributions that can be made from the ABLE account, versus the special needs trust. So, and what about taxes? The income earned on an ABLE account is tax-free, as we already discussed. For a special needs trust, it depends on how the trust is structured. What about Medicaid payback? So first, let me explain what that means. If the disabled person dies and they received Medicaid payments during their life, they may have to pay them back if they have money at the time they pass away. So Medicaid rules say that if you pass away and if you have money, then at that time, if we paid out Medicaid to you, you owe us what we paid out to you. And before that money that you have can go anywhere else, we have to get paid back what we paid out. So that's Medicaid payback. Now, with the ABLE account, most likely any amount that is paid to Medicaid will have to get paid back to Medicaid. That is one of the restrictions, one of the key restrictions of the ABLE account, that there is a strict Medicaid payback requirement. The only exception is if there's another family member who also has disabilities and the ABLE account can be transferred to that person. If that exception is not there, then if there's money left in the account and the person passes away, that money is going to have to be paid back to Medicaid if Medicaid had paid out anything to the person during their lifetime. With the special needs trust, that it might not have to be repaid. So if it was a trust established by the disabled person, meaning it's a first person special needs trust, then there is a Medicaid payback requirement. But if the special needs trust was established by anyone else, for example, the parents of a disabled person, then there is no Medicaid payback. Okay. Next slide. All right, so we're going to look at an example. Okay, so we have Beneficiary, and he receives SSI, Social Security income. Okay, because he has a disability and he can't work. Now, he happens to receive an inheritance of $20,000 from his grandparents. They wanted to make sure they provided for him after they passed away. This is a common mistake people make. They will leave money, an inheritance, or a gift, like a big birthday gift, outright to a disabled person. That's the worst thing. That's the worst way you can help that disabled person, by leaving their money outright, because you're creating all kinds of problems for them. They could lose their SSI. They could end up having to do Medicaid payback. There are better ways of setting it up. But in this case, Benny's grandparents left him an inheritance of $20,000. So now he has this money. He's thrilled and excited that he got this money, and he wants to make sure that he stays in control of it. He wants to know, how can he stay on his SSI while retaining the money that he received? So next slide. We have a few different options of what we can do. So first of all, let's assume that Benny has capacity, meaning that his disabilities are physical in nature, not mental. He can think for himself, he can make decisions for himself, and he can sign legal documents. So if that's the case, he can establish an ABLE account on his behalf, and he can contribute $15,000 to it, which is the annual limit for contributions to the ABLE account. If he does not have mental capacity, then somebody else, a parent, a guardian, can establish the ABLE account on his behalf and also contribute the $15,000 to it. So that's $15,000 he can put in that. He still has $5,000 left. That $5,000 would have to be spent within that same month, because if it's not, then for the following month, it's going to have to be reported to SSI. It's going to have to be reported to Medicaid, and they can stop their payments. If the money if that $5,000 hasn't been used up, they could say, well, you're going to have to use that money to pay for your care until you have exhausted it. And in the meantime, we're going to stop your SSI or your Medicaid. So he has to spend down the entire $5,000, which he doesn't really have a problem doing. He buys a few nice things, and before you know it, the money is all gone. Now, other things that can be done are, well, one thing to know is now he's established the ABLE account. So what does that do? That allows him to stay on SSI as long as he spends down the $5,000. And it allows him to be in control of the money. He doesn't have to spend the money to set up a special needs trust. Now, that's all the positives about the ABLE account. The downside is that if Benny passes away and there's still money left in that ABLE account, most likely it's going to have to get paid back to the government. It cannot go to another family member. Whereas if it had been in a special needs trust, it would have been able to be passed on to another family member. Okay. All right, next slide. Now, it's important to remember that a special needs trust is still the gold standard in planning for special needs beneficiaries. The ABLE account, it's like a little something extra on the side. It's a complementary tool to the special needs trust. But the special needs trust has more flexibility. There is no limit on the holdings. There is no payback with a third-party special needs trust. And for Muslims, there are no restrictions on the investments. But of course, the downside is that it does cost extra to establish the special needs trust. The ABLE account is not as flexible, but it's the answer for a smaller amount of money if somebody has a small amount of money. All right. Now, next slide. So as I said, the two complement each other. When you have a special needs trust, you should still have an ABLE account, that they go hand in hand. Why is it important to have both? Because certain distributions that are not qualified disability expenses, if you take those from the special needs trust, that may reduce the amount of SSI. If you have an ABLE account, use the money in the ABLE account for those expenses, pay the income tax and the 10% penalty. That's probably still going to be cheaper than taking a dollar for dollar discount on the SSI. All right, so with that, next slide. I hope that this has been helpful. This was my brief introduction primer on ABLE accounts, but I know we still went over a lot of information. I want to leave plenty of time for Q&A, so we'll go ahead and open it up now. If you have any questions, feel free to ask. Let's see. Can a debit card be used to pay for items? Yes, it can. If you are in a state that allows, if the ABLE account, the type of ABLE account that's offered by the state where you established it comes with a debit card, yes, you can use it to pay for items. Yes, you can use it like a checking account, and you can put in a specific amount of money in it, and then the beneficiary, the disabled person, will be limited to the amount that's in there. You can designate, how much they can use with the debit account. Okay, there's another question. I'm taking a quick minute to read it. Money when he needs it. Okay, my ex-husband wants child support that he pays for our 25-year-old son put into an ABLE account. I am the mom and I have custody. I want to make sure my son or I can access this money when he needs it or when I need it for him. Food, entertainment, medical expenses, not covered by Medicaid, etc. Well, you should be able to do that because the owner of the account is the beneficiary. So your son, he's an adult, he's 25, he would be the owner of the account. So he should be able to have access and ownership of the account as long as he has mental capacity. If he does not have mental capacity, it's going to be his guardian or his agent. So we need a little bit more information to fully answer this question. And it also depends on, if he has a guardian and who that guardian is, if it's you or if it's your ex-husband. So there will be some other factors that may impact the answer. But if he's disabled but mentally he does not have an incapacity, then he should be able to control that account himself and use the money for his needs. Another question. Is it right to say that leaving a will to a disabled child may jeopardize his SSI when parents die? Yes, that is correct. And that is often an error people make. That is to have a will and leave an outright inheritance to a disabled child. If you do that, that can jeopardize their ability to continue receiving SSI because Social Security Administration is going to say, well, you have this bunch of money that you've received. So we are going to stop your SSI payments and we're going to expect you to use up the inheritance that you received to pay for your care. And when you have exhausted that, then we will start paying out SSI again. We don't want that to happen because the problem with that then is all their inheritance is going to get used up to pay for their care. What we want to see happen is that the inheritance is protected in a separate account, whether it's an ABLE account or a special needs trust. And the money is there to be used by the beneficiary for things that SSI won't pay for things that their monthly income won't cover. So we want them to have that little benefit on the side to keep giving them some happiness in their lifetime. Also, we don't know, many times a disabled child will outlive their parents, outlive their siblings. This person may live for a long time to come, and they may need this extra money on the side to pay for the things that SSI won't pay for. And when their family members are gone, they don't have anybody else to chip in and, come and maybe buy them a new pair of jeans or take them out to dinner. We want this money to be there in the ABLE account or in a special needs trust to provide for those things. So the worst thing you can do is create a will or a trust that leaves an outright distribution and inheritance to a disabled child. Always make sure that the will specifies that I am leaving $500 to Johnny to be distributed to the ABLE account established for him at such and such bank. Or I am leaving $500 to Johnny's special needs trust dated such and such. That's the way the designation should read in a will or a trust document. All right, other questions? Does Illinois have a debit card? Yes, it does. And if you go to the website that I shared earlier, the ABLE National Resource Center, there is a really nice breakdown on that website about every state's ABLE account offerings, and you can compare what each state offers, whether they have a debit card available. You can also see what fee they charge, how much they, what's their fee for the investments, and how many different types of investments they allow. So I would encourage you to visit that website. If we can go back on the slides, it was one of the earlier slides that would allow people to see that as well. Okay, any other questions? Okay, question. If my son has SSDI, Medicare, and a special needs trust, does he still need an ABLE account? Good question. So as I said, the ABLE account and a special needs trust are complementary. They go hand in hand. It is a good idea to have both because there may be some things that he wants to do or you want to do for him that if you use the money in the special needs trust, it might impact his SSDI for that month, or his SSI rather, not his SSDI. But if you take it out of the ABLE account, then it won't impact the benefit payment. So in some cases, it makes more sense to use the money in the ABLE account than it does to use the special needs trust money. This is a case-by-case assessment, but generally speaking, it is a good idea to have both. I would keep more money in the special needs trust than in the ABLE account, but have a little something in the ABLE account just for things that you don't want to use the special needs trust money for because it's not a proper designated disability expense. Other questions? How is SSI determined and the resources? This is a good question, but this is this involves a long, complex answer. There's a lot of different factors, and since our topic today is ABLE accounts, I'm going to defer this question for a future presentation, perhaps on SSI and how it's determined. I don't want to confuse people today since we're talking about ABLE accounts. Does real estate property ownership left by parents to a disabled child get counted towards is it a countable asset in determining SSI or Medicaid? Good question. Yes, it absolutely is, because it's still considered an asset of the disabled person. It's considered property. So it would definitely count in determining their SSI or Medicaid. Now, there are a few minor exceptions to that. There are times when a person passes away and they've been caring for a disabled person. The house can go to the disabled person and Medicaid will not count it. Maybe they will place a lien at the time on the property at the time of the disabled person's death. But generally speaking, it does get counted. We should know a little bit more about the specifics of the situation to be able to tell you definitively. But it is something to make sure you have looked at and discussed with an attorney. Other questions? Does the state of West Virginia allow you to have an ABLE account for a special needs trust? I cannot remember offhand. You know what? Let me take a quick look. I do have my chart open here. I can tell you. All right, so my understanding is, yes, West Virginia does allow you to have an ABLE account for a special needs trust. I mean, for a special needs child. They do offer a state ABLE account program. You should take a look at it and compare it to other state programs. I don't know anything about the specifics about the West Virginia program, but again, if you go to the ABLE National Resource Center, which is ablenrc.org, there is a table there that will allow you to see how West Virginia compares to other states. Other questions? All right. Well, thank you, Tracy. I appreciate it. It's my pleasure. All right. If you have any questions, you can also put them in the in the chat. My pleasure, Ravito. Welcome. All right. It looks like we don't have any other questions. So then, with that, I will wrap up, and I don't know if the host has anything to add. I'll turn it over to them and let them add whatever administrative comments they need to add.